The market has definitely shifted to buyers' favor, but sellers can still find success if they are well prepared. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 19th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Let's start off by looking at how the market performed this week. There are now 55 homes active on the market, which is 4 more than last week. The average asking price is about the same at $1,981,000, up a little bit from the average asking of $1,958,000 last week. 11 homes went pending this week, which is significantly better than last week's 2. The average asking price for those pending homes is $1,981,000, which is the same as the average asking price of the current active homes. And that's more than the $1,878,000 average for last week's 2 pending homes. 9 homes sold this week, which is slightly less than last week's number. I'm losing connection, I don't know why. Let's try. Yep, there we go. The average sales price is down slightly to $2,221,000, down from $2,074,000 last week. Okay, so now we know how the market performed this week, but next we can look at the broader trends that help us determine where the market might be heading. Before we do that, if you do find this information helpful, you can hit the subscribe button down below so you don't miss out on future updates. And why not share it with a friend as well? Everyone deserves to be in the know about how their local market is affecting them. All right, let's take a look at those indicators. Like I said at the beginning, 55, not 51, that is wrong. But there are currently 55 active homes on the market. I've talked in the past about how 50 homes is the historical average for single-family home inventory in San Ramon. But that number hasn't been the average now for the past 3 years. We've really floated in that 30 or lower range for 3 years now. In fact, anytime we reach over 40 single-family homes, we see a drop in the turnover rate. So I think it's safe to assume that we are in an inventory range that favors buyers and is well over the standard inventory levels. What's more is that we are seeing more homes adjust prices, which is a clear indication that the inventory is higher than the demand for homes currently. With that being said, the turnover rate did see some adjustments this week that are favorable to sellers, just slightly. It didn't move much, only by a percentage point, but the number of pending sales this week did jump. The turnover rate is more telling metric, and the fact that it didn't fall dramatically, even with the inventory climbing, demonstrates that the market is resisting the current trend of softening, especially with how many homes went pending this week. The next 2 metrics that we keep track of are lagging indicators, and that means that the information they provide is about 1 month old by the time it's reported. The over-under number has leveled off for the past few weeks, right there, hovering just around 2% over asking. What this tells me is that despite the sudden increase in inventory and reduction in the turnover rate, buyers are still willing to pay a premium and compete for well-appointed homes. Meanwhile, the average sales price also improved this week. It is up just a little bit, even though it's basically been flatlining for the past few weeks. It's up $24,000 from last week, and as we look at the average asking price on pending sales, that number should maintain around the current average, somewhere in that $1.9 to $2 million range. If inventory continues to climb, though, we should see these prices begin to drop. The Triple Q has had several months of very consistent growth, but this week it had its first significant fall off in several weeks. This is likely due to political discussions about the chip manufacturing and tariffs with China The key thing to consider for our market is that a lot of buyer money is tied up in the tech sector, so any significant hit to the stock market can affect buyers' affordability. A 1-week hiccup isn't necessarily scary, but it is something to keep an eye on in the coming weeks for sure. The other future indicator that we pay close attention to is interest rates. Those took a relatively large step down this week, 12 basis points. Interest rates are still well over 6%, but any downward movement is nice and good to see, as it helps buyers' money stretch farther, giving them more options as they are looking for a home to call their own. The market has definitely slowed down over the past month. The inventory continues to climb, the turnover rate is almost below 50% of a normal healthy market, and we are starting to see more and more homes sit on the market for more than 30 days, and several homes have had to reduce price before getting into contract. Despite all that information, we are still seeing the average price hold pretty steady, and homes that are prepared for the market and priced well are pending quickly. Half of the current pending inventory were on the market for less than 2 weeks before they went pending currently. So, buyers have more ability to be slow and discerning when they are shopping in today's market, but a seller who puts the work in before going on the market can still receive solid prices and sell quickly. Thanks for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful, confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.